Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving right into. The market rout rolls on. Stocks sliding to kick off the week as the market faces two key tests. Got NVIDIA results coming after the close on Wednesday and the delayed September jobs report. We'll take a closer look at that action. Plus the data center build out moving to the Wild West. We get a status check from one investor on the demand picture and the rising pushback to the rapid construction. And taking on the heavy hitters in AI, Grammarly, an AI writing assistant, is getting a fresh look and unveiling a slate of new tools in this rapidly competitive space. A conversation with the CEO is ahead. Well, the data center boom is reshaping America's economic map, and much of that growth is happening far from Silicon Valley. Our next guest calls it the rise of the, quote, rodeo region, a stretch of the Mountain West and the Southwest now attracting billions in investments from tech giants. For more, we want to bring in here Rick Pederson, Bow River Capital Vice Chairman, Economist, and Chief Strategy Officer. Rick, it is good to see you. So you refer to the rodeo region of the country that you say is America's new data center heartland. Why, Rick? Let's just start right there. What explains that trend?
Well, a number of reasons, Josh. The center of the country where our company invests in alternative assets, be they private equity, real estate, software, private credit, we have found this part of the country for the last 15 years growing at a pace faster than the rest of the nation, measured by employment growth, income growth, labor participation, job creation, and productivity, almost all segments. And so that underlying that is a part of the reason why we're seeing the sort of the attraction to the middle of the country for these mega projects. We're watching, obviously, this capital investment in semiconductor plants and in data centers for three important reasons. One, this is a important component of overall U.S. economic growth right now. Number two is these investments drive the regional economies where the facilities land. And like everyone, including the stock market, we're trying to guess at when these investments will create returns for the companies and also for the United States in terms of productivity. The important reasons, I think, Josh, that we're seeing semiconductor plants in, for example, Arizona, data centers largely in Texas, has to do with land availability, cluster of operating synergies, but very importantly to especially data centers is the availability and cost of electricity to drive them. We have that in the center of the country, Texas particularly.
Let's take a real-world example here, Rick. Google just committed $40 billion to the great state of Texas. So how should we think about what that could potentially mean for the economy of Texas in terms of ripple effects, Rick? I mean, how do we think about what that could mean for jobs, for tax revenues, for environmental impact? How do you try to think about it?
Well, first of all, Google chose that part of Texas specifically for the same reasons that Oracle, OpenAI have chosen that part of the country. West, North Texas has more power transmission and generation than it does demand. And so these companies are anxious to locate where they can build and build quickly. Another reason is the grid operator in Texas is the only major grid operator in the United States that is not regulated by FERC. And so faster permitting, simpler rules, frankly. But what happens when Google decides to move into an area like Abilene, Texas, Amarillo, Texas? It has significant knock-on effects to the regional economy. Not only do you get huge investment in facilities as measured by construction employment, you also get permanent employment, operating jobs, which creates secondary and tertiary jobs. For example, you will see at Google, once those plants are open, a series of indirect jobs, everything from cloud service providers to cybersecurity, specialized suppliers of water, et cetera. That is the first order of magnitude, and then from there you get second order: housing, retail, schools, etc. For every data center employee that is permanent at a site, we think there are 4 to 5 indirect and tertiary. Semiconductors even more, 6 to 7 times. So it creates a significant ripple effect in the economy in terms of more jobs and also investment. Something that isn't understood is these companies, Google, OpenAI, TSMC in Arizona, once they're there, they invest in workforce training. They invest in the local infrastructure. You see everything from roads to water to schools being advantaged because these companies make these decisions in these locations.
Rick, I only have about 60 seconds left, but very quickly, this AI data center build out, Rick, it's become political. I don't know if you saw this. The Journal recently had a piece about how the political left, for example, they're pointing out downsides of the AI data center build out theme. For example, its impact on electricity costs, Rick. And I'm just curious how you think about that.
It's a good question, and data centers are indeed being blamed for electric costs rising. No doubt they're a part of that. I think in the last 12 months, the state of New Jersey had the highest rate of increase of electricity costs. But data centers are only indirectly responsible for that. A lot of that has to do with the grid, the surrounding demand, et cetera. And so, frankly, this is another reason why you go to a Texas or an Arizona is the generation, and it's not just natural gas anymore. It's wind and solar. Texas leads the nation in both of those sources. And so I would say, notwithstanding electric rates coming up, frankly, the blame is more prosaic. It really isn't data center driven directly. Indirectly it is. Much of it has to do with the state of the grid, which is now in many states 60 years old and needs to be rebuilt. They're having a hard time doing that in the Northeast.
Rick, big, important topic. Thanks for talking about it with us.
Good to see you.
Stick around. Much more Ask for a Trend still to come. U.S. stocks seeing a third day of losses with the Dow falling more than 550 points. Yahoo Finance's Blikre joining us now with the trading day takeaways. Jared.
Thank you. We got to talk about the 50-day moving average, continuation of the conversation we had late last week. And today it was finally a fail for certain markets. And let's take a look at the S&P 500 because, as you might remember, it has been in play. This is the S&P 500 year to date. I'm going to plug our 50-day moving average over it. And you can see, hard to see here, but we just barely broke through it today on the close. And the close is what matters here. So I'm going to dial this down to a 2-month chart, and you can see our candlesticks. So the lows of the day, not only last Friday, but the Friday before that, actually dipped below that line, but they were able to recover into the close. This is the first close we've had below that 50-day moving average since just before May 1st. So that would be in the midst of that recovery off of those scary lows that we had over in April. If we take a look at the technology sector, XLK, and I'll put lines back here, very similar situation. Just closed relatively close to the line, but underneath it nevertheless. I'll put a 2-month chart so you can see that. But then, couple of saves here. The Philly Semiconductor Index, the so-called SOX, we had it penetrated intraday, but we closed above, and NVIDIA above as well. Why do I make so much noise about this? It's because it's like the 200-day moving average. It's one of those technical analysis indicators that everybody looks at. So it can be very self-fulfilling. It generates headlines. And when you get a close like that, the first one in a long time, sometimes you see that spill over in the subsequent day. So not necessarily the next day, but I'll be watching that over this week to see if we get some downside momentum.
You're watching it. Is it time to panic?
Ooh, the Kent Brockman question of the day. I love it. No, not just yet. We got to talk about the lifeblood of a bull market. I'm not going to tell you exactly what that is. I'd rather let Caleb Silver do that. He is the editor-in-chief of...
Smart guy.
He's a very smart guy of Investopedia. We sat down with him for an episode of Stocks in Translation being released Tuesday morning early in the AM. But here's what he had to say.
we've had a pretty good run off those April 2nd or 3rd lows. Stock market was up some 30%. Lots of drum beats around overvaluation, bubbles, fragility, too much weight in one sector of the market. We've heard it all, and it's not crazy to see a little bit of a sell-off here, but a nice little healthy sector rotation if you look at what's happening inside the market. Sector rotation, of course, the lifeblood of the markets.
That is a quote from Ralph Alcampora, the godfather of technical analysis, also the uncle of Jay Woods, a very good friend of the program here. So let's talk about sector rotation. What I have here are all the large cap sectors in the S&P 500 and how they've done since the beginning of the quarter. So that also coincides with the beginning of the shutdown. So there might be some interesting overlap there. Nevertheless, XLV in the pole position up 9%. That's healthcare. Then you got utilities quite a bit less, 2.7%. Then energy, tech barely in the green, kind of struggling there. S&P 500 now is down. So S&P 500 is negative this quarter. And what's not doing well? Communication services, that's mainly Meta and some of the comms, telecoms, materials, discretionary, financials. So a bunch of cyclicals not doing particularly well. Nevertheless, the lifeblood of the market is when all these other sectors step up. So right now, we've got the market still pretty close to their all-time high, so no, it is not time to panic just yet. Hope I answered your question.
You sure did. We covered stocks.
Yes.
I feel like we need a crypto check.
Yes, we do.
Yeah.
Bitcoin's bear. It's been in a bear market for a while. Crypto has not been doing well. No secret there. So let's pull up our crypto universe. Here's Bitcoin. This is quarter to date. That's interesting. Down 17%, but we want to dial this back down to an intraday where Bitcoin is down 2% over the trailing 24 hours. I've been showing this, let me do this 6-month chart there so we can plot. Here is the all-time high. And as we were saying for months, as I was saying for months in here, well, Bitcoin's in a range. Clearly, it is not in a range anymore. Maybe it's just in a bigger range, but it has broken a lot of support levels. So this is a 6-month chart. Let me show you a 2-year. There we go. And you can see now, well, we still got this trend line kind of in play here. You know, depends on how you draw it. But nevertheless, Bitcoin is threatening 90,000, kind of a big deal there. But if you're worried about Bitcoin, you got to think about some of the other crypto tokens here because they're down quite a bit more. So this is just over the last month where Bitcoin's off 14%, Ethereum's off 21%, and some of these like Solana down 28%. So there's a lot of damage being done within the ecosystem. I've said for a long time, even kind of just a few weeks ago, it looks like Bitcoin is starting to sell off. I'm a short-term bear, still a long-term bull.
You want to end here on the dollar?
Yeah, let's take a look at the dollar. Haven't done that in a while. The dollar has actually been kind of in rally mode for the last few months. But if you take a look at the year to date, you can see it's still kind of stuck in the bottom end of a trading range. So let me show you what I mean here. Here's the US dollar index, here's the year to date, and here we have risen off of these lows. Doesn't look like a lot from this chart because we've had such a big downtrend in the beginning of the year, but this is a decent sized range right here. So we came from the bottom of the range, we tested the top, and we're now a little bit off of that. I think upside is limited. I'd be surprised if the dollar is able to pop above 100, and 96 is a level to watch to the downside. Anything in between, well, yeah, I wouldn't make a big deal out of it.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around, much more for trends still to come. Grammarly, one of the most popular AI writing assistants out there with a current valuation of over $13 billion, just rebranded to Superhuman. The company's CEO, Shishir Mehrotra, joined Morning Brief Market Sunrise this morning to discuss the move and a possible IPO.
We decided to change the corporate brand from Grammarly to Superhuman. Our ambitions have just grown a lot. We now have 4 different products under that umbrella. Grammarly continues to be one of the most important products in the set, but as we expand the breadth of what we do, wanted to make sure that we had a corporate name that spanned our ambition as well.
Some might say that this might be a sign that you're preparing for an IPO. Are you?
I have nothing to announce there now. We've long been ready for metrics-wise for being able to go public, but we're going through a pretty big transformation now, going from a single product company to a multi-product company, taking the foundation of Grammarly and turning it into a platform for running agents that work right where you work. And I'm very focused on making that transformation happen. And then we'll worry about the public markets when we're ready.
Let's dig a bit deeper into your business. What currently would you say is your biggest market?
Yeah, so we work all over the world. We have about 40 million daily active users, span basically every country in the world. About a third of those are students, about 2/3 are professionals. A very wide set of use cases for how Grammarly helps all of those people be better communicators.
Superhuman is in a pretty competitive space. So how do you actually compete against the likes of Google for typing assist, for example?
Yeah, I think the approach that we have here at Superhuman Grammarly is pretty different than I think what most other players have in the AI space have been working on. If you were to take all the different AI players out there and group them into 3 broad buckets, you could have the set of people that are focused on what we call assist, chat, and do. So there's a big market that's focused on chat. That's obviously ChatGPT and many people building AI chatbots that make AI feel like a virtual collaborator, a virtual human that you can talk to. There's others focused on what we call do, which is about taking AI agents and asking them to run off and do tasks without having to be interactive. We work on a very different kind of AI we call assist. It's all about bringing AI right to where people work. So Grammarly works in about a million different applications, every web app, desktop app, and mobile app. We are right there with you, embedded in your experience, and we bring the AI to you instead of the other way around. And that's pretty fundamentally different than what I think most other players have been doing.
Now, one key feature is that you have AI agents that work alongside human beings. How does that actually work?
Yeah, so it's for people that are used to working with Grammarly, they'll view it as almost like an invisible proactive AI. Grammarly, one of the secrets of how the system works is that it comes and is proactive right where you're working. So you might be in a web application like Gmail or Google Docs, or you might be in a desktop application like Slack or Word, or even mobile applications. In all of those cases, we're embedded right in your experience. Now, one of the interesting things about it is that up till now, we've been using that infrastructure mainly for running just one agent. It's a very popular agent. It's like having your high school grammar teacher right next to you everywhere that you work. But what we're going through now is opening up that platform to any agent. So now instead of just your grammar teacher helping you, you could have your sales coach, you could have your support coach, you could have all of the different applications that you work with available to help you construct the right communication in a productive environment.
But isn't there a worry that in education where students are becoming a little bit too reliant on AI?
So for students, there's a pretty wide range of how students are interacting on the platform and how educational institutions are working with us to bring the best educational experience to students. There's obviously cases where you want students to work without any assistance. Just like I think of like when calculators came out, you would have test taking and so on that would be done without calculators. But at the same point, we have thousands of educational institutions that work with us to prepare students for the real world. You want your students to actually be able to use all the tools they're going to be asked to be using in that real world as well. And so from that perspective, we work right alongside those institutions to find those patterns. One easy example is we launched a feature called authorship last year, which allows for an institution or a teacher to actually moderate how much assistance that user is getting and track whether the work was done with or without AI, sometimes dialing it up and sometimes dialing it down. So lots of different partnership happening there.
You've obviously done a lot of deals and done a lot of tie-ups in recent years, but which publicly listed companies would you invest in when it comes to AI?
Yeah, so we've certainly broadened our footprint quite dramatically. We purchased the company Coda. That was the company I founded about a year ago. We also acquired the preeminent email product in Superhuman Mail, and we're broadening our footprint pretty widely, buying, building, and partnering with different applications to provide that AI native productivity suite. We work in partnership with a lot of different companies. We're one of the biggest customers for all of the different AI clouds. One fun stat is we do over 100 billion LLM calls per week. So we're one of the largest AI end providers out there and make pretty heavy use of all of the different AI clouds.
So the last time when you were Grammarly and you went for some funding, you were valued at around $13 billion. How big do you think the company could become now with all these products that you're trying to put together under Superhuman?
Yeah, it's a great question. So Grammarly is already a lot larger than people think. We do over $700 million in revenue a year. As you mentioned, last time we raised capital, we were valued at over $13 billion. And our ambitions and scope of products has dramatically expanded since then. it would be my view that Grammarly and now Superhuman can be one of those preeminent AI companies that really complete the last mile of bringing AI to people everywhere they work. And my ambition for it is to be right alongside many of the top AI names that are working hard in this field.
And are you confident that the space for you to grow is there, that the market is big enough?
As the market big enough, I think the market is enormous. I think the phase we're going through right now is really about redefining productivity at its very core level. And I think just about every surface will be reinvented in that process.
That's a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.